everyone. My name is Leah. I'm from S&P Global, and my main area of coverage is on battery metals. So I focus on lithium, cobalt, nickel, and more recently, manganese as well. Yeah. Okay. So just a brief introduction about Platts. As many of you know, Platts is the leading information provider in the commodity space. So we actually serve more than 15,000 customers all over the globe. And these companies include major miners, which some of you are present here today as well. And our prices are also used in financial contracts, and some of the commodity contracts across the global exchanges are also priced on our Platts prices. So specifically for battery metals, we cover a range of prices, including lithium, cobalt, nickel, and manganese sulfate, as well as spodumene. So all our prices are actually assessed on a daily basis. And this is in order for us to capture the increased spot liquidity in the market, especially for lithium prices ever since the start of last year. Sorry? We actually speak to a variety of market sources, including miners, lithium converters, producers, battery makers, cathode makers, etc. So people who are directly involved in the market. Yeah. So over here is also a snapshot of our HERTZ table. So HERTZ is literally the price data that we hear from the market. So we call it HERTZ. And this is a sample of the data that we collect. So throughout the day, we may hear indications from the market, including trades, bids, offers, tradable indicators. So it will all be collated, and then we'll send this out every Friday. So later on, if you would like to receive this, we can add you in our mailing list. Yeah. Sorry? Yeah, so the prices are assessed daily basis out of the Singapore office. And then for the HERTZ table, we send it out via email on Fridays. So on Friday, this will be a collation of the entire week's worth of HERTZ. Okay, so now I'll go into the exciting bit of the presentation, which is on an overview of battery metals, as well as some of the shifting battery chemistries that we see in the market. So on this slide here, on the left-hand side, we can see that the prices of battery raw materials, including lithium carbonate, lithium hydroxide, cobalt, as well as nickel prices, it may seem as though cobalt and nickel prices were relatively flat throughout the whole of last year, but actually that wasn't the case at all. There were also fluctuations in these prices. It's just that for lithium prices, which is the blue and red line over there, they dwarf the other prices. So we can see that lithium prices is more or less a one-way traffic throughout the whole of last year. And recently, prices have been hovering at a really high level due to events happening in China as well. We know that there were droughts, power cuts, and then more recently, there's also a lot of COVID outbreaks in China. So later on, I'll go more into details on the lithium part. But before I go into that, I will also briefly like to introduce two battery chemistries that are more prevalent in the market. So one is LFP, which is lithium iron phosphate battery, and the other battery is NMC, nickel manganese cobalt batteries. So these two are the more predominant type of batteries that we see in the EV market. So so later we'll see in this slide. If we take a look at the right-hand side, we see that many analysts in the market, they actually project that EV sales within domestic China will reach 6.5 million units this year. And this number has already doubled since last year because China last year's production was 3 million. So this year is forecasted at 6.5 million. And I realized that this number keeps changing because last month, back in August, September, some of the forecast was at 6.2 million units. So I think people are becoming more and more bullish about the EV market. And we see that the global projection is also at 9 million units for this year. So definitely a very bullish market ahead of us. But even though China's EV sales are projected to be above 6 million units, we also see that there is a few shifting battery preferences within the EV space as well. So if we take a look at the left-hand side diagram, the blue and yellow portion, we see that the LFP battery market share, which is the bottom blue portion, is going to dominate the EV sales. So since the start of 2021, we see that LFP market share has been dominating over the NMC battery production. So this is set to be a prevalent trend that we see in the Chinese market. Because just this morning I was speaking to a lithium converter, and then he was telling me that he believes NMC battery will slowly phase out of the country. But it may not be necessarily the case because actually many years ago, people believe that LFP battery will only be used for a smaller scale application like electric scooters, etc. And it was never a countrywide or even a citywide application. But for nickel, high nickel, rich nickel NMC battery, its nickel content provides the energy density that is needed for the EV to drive a longer distance, which is why it is still very much preferred by consumers. But we see that improvements in terms of technology actually change this dynamics a bit. So a few years ago, LFP battery may offer about 100 miles of driving distance out of one single battery charge. But more recently, we see that Tesla's Model 3, the EV, it allows about 272 miles out of one single battery charge. So definitely improvements in technology has changed this dynamics a bit. And for comparison's sake, if we take a look at Volkswagen's ID.4, which uses NMC battery, it offers about 280 miles out of one single charge. So we can see that it's catching up pretty fast for LFP battery technology. Yeah, and another thing to note is that for LFP battery, it is far more cost competitive compared to NMC battery, because for LFP, it doesn't use any expensive raw materials like cobalt or nickel. So it can use directly lithium carbonate. Yeah. So, but it's back to the what the lithium converter said to me this morning, right? It's going to be pretty hard for NMC battery to completely phase out of the country, because even within domestic China, we see that for North and South China, the dynamics are also a bit different. Because in the north of China, where it's colder, the consumers actually prefer NMC battery because LFP batteries energy density drops in colder temperatures. So even within China, we see that there is still a bit of difference in terms of battery preferences. It drops about to 20 to 40% in terms of energy density. Yeah. Yeah. So yeah, on this slide, if we do compare the preferences within China versus the rest of the world, the buying behaviors are also a bit different. So for the left-hand side diagram, the bottom teal green portion, we see that our market intelligence team, they forecast that this year, LFP battery installation share will reach about 66%, and this number will further increase to 80% by 2026. And I would say that this is still a relatively conservative estimate because many in the Chinese market actually put this at a much higher percentage because they feel that LFP battery will dominate more. So on the flip side, if we take a look at the right-hand side diagram, we see that the international market is still very much preferring the NMC battery in their EVs. So for NMC battery, it can easily reach 400 to 500 miles. So just now when I mentioned that LFP battery technology improves, NMC battery technology also improves. So for newer models this year, for example, Mercedes-Benz EQXX, it can easily reach 600 miles. So that's double of the LFP battery EVs. Yeah, so I would say that for consumers to switch from an ICE car, internal combustion engine car, to an EV, you definitely need to address this road trip anxiety. What if I drive halfway and my car runs out of battery? It's going to be a huge headache for me. So this road trip anxiety is something that only nickel addresses because nickel component is the one that provides the energy density in EVs. Yeah. So another thing to note is that for China, they have been offering subsidies for EVs for over a decade, whereas the West has actually just begun this journey. So I think we'll see this shifting battery preferences even more when China stops the subsidy at the end of this year, 31st December, when the subsidy rolls off. So people are expecting more and more LFP adoption in China. But definitely outside of China, we also see more LFP usage as well. So for example, Tesla's Model 3 is using LFP battery. And last year, Ford and Volkswagen has also said that they will use LFP battery in all their standard range models. So I would say that this is definitely not a China story per se, but it will very much be seen in the West moving forward as well. Yeah. So on this slide, we can see that the battery capacity is currently dominated by China in the middle portion. And however, we definitely do see strong growth in Europe as well because more and more investments are happening, although it's still not very near where China is at the moment. And on the bottom left graph, we can see that Europe has already outpaced the rest of APAC as well as North America in its gigafactory capacity. So all these definitely shows a really strong growth in terms of EV. Yeah. Yeah. Okay, so for NMC battery, if it's currently around $100, then LFP will be 20% cheaper. So that's roughly the comparison. Yeah. So now I'll go into lithium specifically. For the lithium market, if we take a look at the lithium carbonate and lithium hydroxide prices, prices have more or less been a one-way traffic throughout the whole of last year, and even this year is still hovering at a really high level. And if we zoom in on the price spread, we can see that lithium carbonate, which is the yellow line, versus the lithium hydroxide, which is the blue line, the price spread actually show that lithium carbonate is trading at a premium. But lithium hydroxide is actually the downstream product. So you can see that carbonate can be used to produce hydroxide, but the raw material is trading at a premium. So one of the reasons is that lithium carbonate can be used directly in LFP adoption. So once again, we see that the shifting battery preferences actually affects the raw material prices as well, because lithium hydroxide is used in NMC battery. Yeah.
What is the processing costs between from carbonate to hydroxide?
It's about, depending on the individual lithium converter, it's about 10,000 to 20,000 yuan. Yeah. So yeah, just to continue, even from end of last year, actually many of the producers that we spoke to, they actually say that they are fully booked for the entire year of this year. And when we ask about their supply commitments for next year, they also share that they are very uncertain if they have any spot materials left over, because most of their materials are already committed to the long-term supply. So this is how tight the supply situation is. And as mentioned just now, there's also a series of really unfortunate events happening in China since last month, I would say. So like in Chengdu, which is in Sichuan province, we see that there is a lot of drought and power cut situation, and even a small scale earthquake happening there last month. And more recently, there is also a lot of COVID outbreaks. So at the moment, there's already at least one case in across 31 provinces in China. And I know you may think that one case is not a lot, but like in Singapore, we have thousands of cases every day. But it's actually a very big deal to have one case in China because of their COVID zero policy. So they really try to stem out the COVID outbreaks, especially ahead of their Congress, which is happening on October 16. So they really try to control the spread of this COVID situation. And we see that even though the impact on production is not very significant at the moment, but it does pose a huge transportation hurdle in terms of raw material transport. So because it's very hard to get especially if you have, for example, one residential or one province lockdown, it's very hard to get the materials out of that province. So later on in the next slide, you will see that this has also affected the export market, because China is one of the largest exporter of lithium hydroxide. Yeah. So, another thing to note is that the battery pack cost has actually gone up for the first time in over a decade. So this is something that is very concerning, because in order for the consumers to switch from an ICE car to an EV, you actually need to drive the raw materials cost down. But the reverse is actually happening now because of the high raw material prices. Yeah. So that being said about the Chinese market, if we take a look at the international market, we see that the international market actually follows the Chinese market quite closely. So for the international market, mainly for South Korea as well as Japan, they actually have a much smaller spot market, because many of them prefer to have their supply commitments under term contract. So their price fluctuation is not that intense as the Chinese market, because the Chinese market have a much bigger spot market. So at the moment, if we take a look at the international market price, the lithium hydroxide, which is the orange line, is actually above the lithium carbonate, the blue line. So this is I would say normal trend, because hydroxide is the downstream product. And this is mainly because of the NMC battery demand outside of China, as mentioned just now. Many people outside of China prefer NMC battery due to the nickel-rich content that allows for the longer drive range. So the demand from Japan and Korea has definitely driven the hydroxide prices up above the carbonate price. Yeah. So another thing to note is that China is the net importer of carbonate. So over 90% of the lithium conversion capacity is actually in China. And then they are the net exporter of hydroxide. So most of the materials get exported to Japan, Korea, Europe. Yeah. So moving further upstream, we have spodumene, which is the lithium ore or concentrate that's mostly coming out of Australia hard rock. So the whole spodumene market, I would say, is still very much affected by the low prices that's seen across 2018 to 2020. So many investors were actually burned by lithium when prices crashed back in 2018 due to the oversupply situation in the market. So they are still quite hesitant to go into investing in lithium or spodumene. Yeah, so this has actually caused the availability of spodumene, which is the main raw material to produce lithium carbonate and lithium hydroxide that is used in every single EVs, to be extremely tight in supply. So in this picture, you can see that also like lithium, the prices are more or less a one-way traffic. And with EV sales for this year expected to reach 6.5 million units in China, we definitely see that there is a booming demand for the raw materials that's going to be used in every single EV battery cell. And on September 20th last month, we see that Pilbara Minerals, their auction actually fetched the highest winning bid of 6,988. So this price of spodumene is actually equivalent to yuan 520,000 per ton of lithium carbonate. So if we take a look at the spot price now for lithium carbonate, it's more or less a break-even situation. So whatever you buy and you produce, you don't get any profit. So that's how high the spodumene price is at the moment. And this has been exacerbated by the depreciating yuan in recent weeks. So definitely a much higher cost to import these materials for the lithium converters. And we see that the spike in prices is not just in the spot market as well. Some of the miners also shared that their term contracts have also reflected these high prices. So some of them shared that their Q3 spodumene contract has already reached $5,000 per ton. So very close to the current spot market. Yeah. So before I move to the next slide, I would say that the investment in spodumene is definitely one of the biggest hurdle that the market needs in order to address the supply issue. Because if we take a look at this slide, so I will focus on the lithium deficit roadmap, which is on the right-hand side. So our team has actually put together this forecast that the estimation by most in the market is that lithium demand will reach about 1 million tons by 2025 and 2 million tons by 2030. So if we take into account the existing projects that right now and the new expansion plans, as well as the new projects that's going to happen in the near term, by 2030, if all of these plans are being fulfilled and reach production capacity, we are still going to be about 220,000 tons short in terms of supply. So it does not mean that new supply cannot come out from, for example, new expansion project tomorrow or new mining project that's announced tomorrow. But at this point in time, with the information that we have, the market is definitely facing a structural deficit in terms of meeting all these booming demand. So as you can see in the, I know it's a bit small, but if we take a look at the bottom portion, we'll share the slides later on. So yeah, it says in the middle that it takes about 10 to 15 years for a mining project to come online and to reach production capacity. So I would say that right now, all the investments that are being made right now will only come online in 2025 or even towards the end of the decade. Because I invest in a mine right now doesn't mean that I can start production tomorrow. It really depends on how far along they are in terms of their feasibility studies, the scoping, and the building process. So definitely it takes a really long time for the lithium supply to come into the market. So so the supply situation that we see right now is definitely providing the support for lithium prices. And actually, many people in the market believe that prices will remain supported at the current level in the near term because there's not a lot of new expansion plan that's coming online. Yeah. So in conclusion, what's next for EVs. So, excuse me, as mentioned just now, China will likely be leading the charge in terms of EV sales and adoption in their market. And throughout the end of the year, Platts analytics team also expect that the sales in EV, as mentioned just now, will reach about 6.5 million units. And we also definitely see a really strong growth in EU 27 countries, as well as Norway and UK. So the surging battery metals raw materials prices could be of concern to battery makers because, as I mentioned just now, battery pack cost has gone up for the first time in over a decade. But this is really the point in time where OEMs really have to try to drive down the raw material cost in order to remain competitive against ICE cars for this EV adoption to take place. So another trend that we're seeing is that there will be more and more LFP adoption in the market. So especially in the Chinese market, but we also really see strong growth in the European countries as well, as more and more battery makers incorporate LFP into their EV makeup, I was saying, yeah. So what we're seeing is definitely a really strong battery decade ahead of us. So yeah, I've come to the end of my presentation. So one more slide. Just to introduce what we offer at Platts. So right now at the moment, we do have a battery metals report that's sent out every Monday. So that includes commentaries on lithium, cobalt, nickel, as well as manganese. And we also have a lot of battery-related news that's included in the report. So at the moment, the report is free. So if you would like to be added to the distribution list, you can feel free to approach me later on. And as mentioned just now, the battery metals hertz, which is all the price data that we collect throughout the week, will also be sent out every Friday. So yeah, those are under the distribution list. And we also have podcasts released every 1 or 2 months that will discuss about anything that's related to EV, I would say, yeah. So thank you for your time today. Yeah, have a great evening.
Hi, I wanted to understand how are the lithium, for example, what are the contract terms like? What's a typical, how does a miner sell their product? What's typical?
Okay, so in the past, I would say that spodumene is very steeped in term contracts, and the term contracts are very, very long. So it can last from 5 to 10 years. That's how long it is.
At a fixed price?
Yes, in the past. But ever since the start of last year, when lithium prices increased by, I think, over 800% in just 1 year, we see that this has actually shifted the pricing dynamics in the market as well. So more and more lithium converters, they actually prefer to tie their term contracts to PRA, so index linked, so that it will reflect the spot market prices in the market. And another trend that we're seeing is also the shortening of term contracts. So in the past, it can be 5 to 10 years, but especially in China, the term contracts are getting shorter. So we see about 1 to 3 years. And in China, sometimes they also have a more frequent price negotiations. So every quarter or so, they will have that negotiation. But in terms of South Korea and Japanese customers, they actually still prefer longer term contracts. So theirs will be about 2 to 3 years, and the price negotiation is not carried out very frequently. So those are the trends that we are seeing in terms of contracts.
So the ones that have offtake, that have signed offtake with the producer, that have not yet produced but signed offtake, what are those terms like?
Oh, those will be confidential, sorry. Yeah. Yeah.
On the demand side, we are hearing news that the gigafactory capacity could be up to 7 terawatt hours in 2030. How much of that do you think will actually come to the market realistically?
Oh, that's I would say that's really hard to answer because it really depends on how much of that capacity can really be fulfilled. Sometimes I announce an expansion plan, but it may not come to fruition because of many issues that may happen, like COVID outbreaks. It may stop my production, etc. So I would say that that's really I will refrain from answering that. It's hard to say. Yeah. Hi.
You mentioned that spodumene spot prices have gone up to a point where it's not very profitable to make lithium carbonate now. So are these converters in China not producing, or is it because they have term contracts, which is why they can still produce at a decent profit margin? And how do you see that kind of moving forward if the prices remain the same?
So for spodumene at the moment, it's still over 90% under term contracts. So most of the major lithium converters based in China, they do have long-standing term contracts. So their supply is not really affected. But I would say that the spot fluctuations in China for spodumene definitely affected the smaller scale lithium refiners. So some of them actually shared that they stopped production or they cut down production because they do not have enough raw materials to continue their production. So definitely one of the trends that we're seeing is for lithium converters, more and more of them are trying to source for new spodumene. They're looking into South Africa, for example, to secure their long-term supply. Thank you. Okay, thank you.